Hi, in light of all of the market volatility we've been experiencing, we wanted to get a message out quickly to all of our clients about inflation, what the Fed has been up to, and a little bit about oil. So let's start out, Doug. What is behind all of this inflation? As of February, we were experiencing an increase of 7.9% year over year. So what's behind that?
Well, part of it is the over demand by the consumer and the lack of supply chain. So you have a combination of too much dollars chasing too few goods, and that's going to drive up the inflation rate. Now, you've been following what the Fed's doing. Why don't you talk about that some?
So today is Wednesday. We're filming. The Fed just finished up their two-day meeting, and they've said that they will be raising rates by 1/4 to 0.5%. They have many other meetings scheduled for the year, so they anticipate further raises. And they stopped quantitative easing last week, which is where they go in and buy back government bonds, which just pumps money into the money supply. They've been doing that for about 13 years now, so which is just really put a lot of artificial money into the money supply, and so pulling back from that is actually a good thing, I think.
We were on a sugar high, so we were pumping so much cash in because of ultra low interest rates, and then buying back the bonds through the quantitative easing. What that does is it keeps interest rates really low, and it's pumping all that money in. And across the board, I think this is overdue. I think we really need these increases. Now, with what's happening with the war in Ukraine, I don't think we're going to see as many increases as we were forecasting in January and November or December. I don't think we'll see that.
It's a lot to balance, and it's such an experiment. It seems like the Fed doesn't really know exactly how far to go.
Well, realize we've never been in this kind of situation before. So I think actually the Fed will be on the side of caution. That's why I don't think we'll see as many increases in interest rates. I think if they see some sort of slowdown in the economy, they'll quickly stop increasing interest rates, or maybe even go back a little bit and reduce them some. So I think they have a good pulse on what's happening.
Now, let's talk about oil for a moment. Obviously, gas prices have been a big point of contention lately, a big part of conversation that I've had with people. Gas has gotten really expensive. What's behind that?
Well, it was a couple things. One, back in 2020, when we went through the whole shutdown of the economy, in reaction to people not driving, the refineries were forced to start cutting back on the production of oil. Now, everyone thinks it's like you just turn off the switch and you're fine. It takes months to start slowing down a refinery. Likewise, it takes months to get it going again. So what we saw is they finally got it reduced just to see the whole economy open up again, and now they're trying to increase the refining, but they're way behind on producing enough oil and gasoline to meet the demands that's happening.
And that was already going on before Russia invaded Ukraine.
Correct. So we saw the oil prices going up, long before any talk of Ukraine at all.
Now, Russia accounts for 8%, according to the Wall Street Journal, of U.S. oil, which obviously we have pulled back on. I mean, the Congress has voted to cut off oil supply from Russia.
Which I think is the right move to do.
And it's a bipartisan effort,
right?
Which is nice to see. And so that has some impact, but...
Yeah, but what a lot of Americans don't realize is that the United States produces 20% of the world's supply of oil.
That's true, but 35% of that gets exported, right?
Correct. And the reason is that's not because of government stuff, that's because of basically the market. You have to realize that the government doesn't really run the oil prices and stuff like that. It's all free market, and if you are a company like that drills and produces and refines oil, and you can get a higher price overseas, you're going to sell overseas, and that's what's happening.
Mm-hmm.
So they're selling overseas because they get a higher price than what they can sell in the United States. With that said, the United States has some of the cheapest gasoline prices in the world.
Right. I read somewhere that Europe, gas prices are about 14 times what we're paying.
Yeah, they've always been high. I've lived in Germany for a while, and they're always way higher than the United States.
Mm-hmm.
One of the reasons is they don't produce oil in that continent at all.
Mm-hmm.
So they have to import all their oil, and they're subject to, for example, Russia has a big impact on natural gas prices for Germany and Italy.
Much larger than what we're feeling. And I mean, the price of a barrel of oil, it did skyrocket for a minute, was well over $100 per
Right.
barrel, but now it's back down. I mean, it's in the 90s again as we're filming today, the mid 90s. So we've been recommending buying energy as a hedge in your portfolio. What's the advice now?
I still think you keep it as a hedge because it could turn around and head right up. And we've been telling clients no more than 10% should be in oil as that hedge, and we kind of keep it there. And sometimes we use a combination of like palladium, which Russia's the largest producer of palladium, and oil. So if like 5% in palladium, 5% in oil, as a way to kind of reduce what could possibly happen. And I know you've been saying it to clients, and I have too. We hope that the oil loses them money and the palladium loses them money, because that means the stock market will do well. And as of yesterday and today, the stock market has been doing well, and the oil prices and palladium prices have been going down.
Mm-hmm. So you definitely see those inversely correlated. They're not moving in the same direction.
At this time.
Mm-hmm.
It doesn't mean like 3 years from now that rule will still apply,
Right.
but at this time they seem to be inversely correlated.
Mm-hmm. So that's a little bit about where we are as of today. This is clearly a crazy market, but we're very much keeping a close eye on things. As always, please give us a call if you have concerns and would like to talk with us about what's going on specifically for your account. Thanks for watching, and we'll see you next time.